Okay, beautiful people. Okay, wonderful people. It's your mentor, Timelo JPY here, the one and only JPY King. So on today's session, beautiful people, we're gonna be mainly focusing on analyzing GER30, US30, and our NAS 100. You understand? So those are the three indices that we're gonna be mainly focusing on. You understand? So the first analysis that we're gonna do is GER30, just gonna go through a top-down analysis within this index here. So now, as we can see that, okay, US30 has, GER30 has been on a bullish trend, right? Creating higher highs and higher lows. And then also, one thing that I always advise my students is that, okay, whenever you are introduced to a trend, kindly start with the properties of a trend and then follow it by the what? By the rules of a trend. And then the properties of an uptrend state that, okay, an uptrend, ladies and gentlemen, it needs to have high highs and high lows. And then a downtrend, the same uptrend, the rules of it is that, okay, the market will break higher highs and respect high lows. You understand? That's what creates the buying momentum within the market. You understand? But then once the market tends to break maybe a low on a downtrend, this means that, okay, something has to happen. You understand? So let's firstly start with our properties. So as you can see that, okay, we have what? A higher high, high low, high high, high low, high high, high low, high high, high low, and then a high high at that level. But then look what happens within the market. Look what happens within the market. So technically, we're expecting the market to do it. We're technically expecting the market to come and respect this demand level here. We're simply expecting the market to come and do it and respect this demand level here. You understand? But then look what the market tends to do. Let's look what the market tends to do. The market tends to take out this demand level here. Because of technically, we can see that, okay, we have what? We have a breakout structure there at the top. We have a breakout structure, that grab of liquidity, then a push to our point of interest. But then the market tends to do it. The market tends to take out our demand level, forcing the market to do it, forcing the market to give us what we call what? An unconfirmed trend. So on an unconfirmed trend, this simply means that, okay, we're gonna firstly introduce the theory of what? The theory of change of market character. That's the first thing that we're gonna do as individuals. You understand? Which means that, okay, the market might be switching from this bullish trend to a bearish trend because of what it has done is that, okay, it has broken one of the downtrend, one of the uptrend rules. You understand? So which means most people are gonna look for entry points within the supply level here. You understand? Within the supply level here. But what I always advise everyone is that, okay, ladies and gentlemen, whenever you are introduced to a unconfirmed trend, kindly, so let's say that, okay, we are introduced to something like this here. The market is pushing up, and then the market tends to do what? Take out this low here. So which means we have what? A breakout structure here. We have our breakout structure there, and then a breakout structure there, and then at the moment we have what we call what? Our unconfirmed trend. You understand? We have our unconfirmed trend at the moment, which means the market gave us what? A charge. You understand? That's the first thing we should think of. So now, what most people are gonna do is that, okay, most people are gonna start looking for the entry points within this level here, within that supply level. You understand? Which is quite risky from my side. Why? Because of there's a high tendency of the market doing what? There's a high tendency of the market coming to this level, respecting it, and then continue pushing with the bullish pressure. You understand? And then the other thing that might happen is that, okay, the market might, like I said, ladies and gentlemen, the market might go tap into your point of interest, give you a breakout, and then start giving you the bearish pressure. You understand? But what I always advise my students is that, okay, they should not take this entry points here. They should not take this entry point. Why? Because of this entry point is risky. There is a high possibility of the market doing what? Pushing. It's a 50-50 situation now. And then which means now as a person, you're doing what? You are gambling, you're no longer trading. You understand? The market can confirm and give you everything. But then if the buyers are in control, this means that, okay, there's a high possibility of the market breaking this level and pushing to the upside. So what is the solution? That's what you should ask me now. That, okay, Tumelo, since when we say that, okay, we can't enter there, what is the solution now? What you can do is that, okay, wait for the market to create a breakout structure after tapping into your point of interest at this level here. You understand? So which means this guy here, he can be free. We can say and say that, okay, is what it was mitigated. Understand? So which means we're going to have a breakout of structure at this level, a graph of liquidity. So now we are going to start looking for our entry point within this level here, within this supply level here. You understand? So on my course, I always tell people that, okay, this theory here, it's called what? A confirmed trend. You understand? We have confirmed that, okay, we're going to push what? On a bearish trend. You understand? So now let's go and see what Geometric has provided us with. Let me just remove all the drawings here. So which means everyone is simply going to take their entry points within that level. So now the market does what? It pushes up. We are still on a monthly time frame. So the market does what? Okay. Let's play. Okay, the market taps into our entry point and then do what it does. It respects and then still respecting. Okay, gives you that beautiful sell. That's where everyone starts looking forward for those drops now. But then the market tends to do it. The market ends up hitting our stop loss and taking out our entry point. You understand? Which is something that is like really risky. I don't advise anyone to take any point at that level, even though the market might give you like a perfect entry point. But from my side, I would say that okay, it's a risky entry point. So which means now everything is gonna change now. We're gonna continue with what? We're gonna continue with our bullish pressure now. We're gonna continue with our bullish pressure. So this one we call it a false change of market character. Yes, then we call it what? A false change of market character. So let's see what the market does afterwards. Let's see what the market does afterwards. So the market continue pushing to the upside. So we're just gonna wait for the market to do it. Simply create our new higher high. That's what we can wait for now. Okay. So still playing around, still playing around. Okay. So now what? Okay, let me pause the video here. So at this level here, just want to talk about this candlestick here. At this level here, you can see that okay, the market ended up doing what? The market ended up creating a higher high. So which means now, since when we had this breakout of structure at this level here, since when we had this breakout of structure at this level here, since when we had this breakout of structure at this level here, this means that okay, the market might come and do it, mitigate our order block. So this way our possible order block would be on our demand level. Okay, we have that order block there. So as you can see that okay, the market ends up doing what? The market ends up tapping into our order block and then start doing what? Giving us those nice bullish pressure. So let me just check something now to confirm everything. Okay, that's fine. So the market ends up doing what? The market ends up tapping into our order block and start pushing to the upside afterwards. So this is the reason why this guy has been pushing to the upside. So now let's go to our weekly time frame. As you can see that okay, I think also it has respected this weekly order block here. It has respected that weekly order block. It tapped into the wick of that entry point. You think okay, here we have to use the body because of this candlestick doesn't have a wick. So what do you do as a trader? You go to your smaller time frames and start looking for your confirmation entry points. So let's go to our 8-hour time frame. When you get to our 8-hour time frame, what is very important here is that okay, as you can see that okay, the market came down creating lows and highs, right? It was on a bearish trend. You understand? The market was what? On a bearish trend. We have a lower low, a lower high, and then a lower low, a lower high, a lower low, a lower high, and then we have what? A lower low, a lower high, and then a current lower low here. And then look what the market has done now. The market has did what? On a bearish trend, the market breaks lows and respect highs. But then at this level here, we can technically see that okay, we had a breakout of structure within this level here. We had a breakout of structure within this level here. And then the market grabbed this liquidity, but then the market did what? The market took out those highs, then forcing the market to create what? A change of market character. You understand? So which means we are technically expecting the market to do what? To revisit those levels. So let's go check on our daily time frame and we might find a proper order block. Yeah. So which means we're expecting the market to revisit and then come tap into this demand level here. That's what we're expecting the market to simply do it, to simply come and tap into that order block then. Understand? Also, we have this one here. Might use this guy as our order block also. But then at the moment, we can use what? We can use the daily one. So this one can be our 4-hour order block. Understand? So the theory of structure, understanding the structure. So also, what is also important is what? Let's go to our 4-hour time frame. We get to a 4 hour time frame, we can see that okay, everything was just fine. Just want to check something very important here. Okay, I just want to cut the charts at this level here because of this way I think the movement happens once the market taps into a point of interest. So let's go to our H1 time frame now. Let's go to our H1 time frame. As you can see that okay, this is what I was looking for. The market was on a very strong right, creating lows and highs, but then once the market taps into a point of interest, it came down doing the same thing, and then it did the same thing here. But look what happens. We're looking for confirmation entry point. The market taps into a point of interest, giving us what? A breakout of structure. You understand? Giving us a breakout of structure. And then it does what? It eliminates this high here, which is not supposed to do, giving us what? A change of market character. So technically we have what? That grab of liquidity. And then I think on the smaller time frame, there might be an order block. So this is our order block here. As you can see that okay, the market comes and taps into our other block, and then that's when our buying opportunities come from, depending on how you entered. If you use the weak entry point or use any other entry point, it's fine. So that's where our buyers came from. You understand? So this way your buyers were supposed to be caught probably. You understand? This way your buyers were supposed to be caught. And then let's see what the market does afterwards. So the market does what? Pushes to the upside beautifully. So your target was gonna be that high then. That's where your target was gonna be. Target was gonna be those highs there. Let me just pause and see. Okay, let's continue now. Then the market ends up doing what? The market ends up taking out our highs. So which means your take profit was gonna be smashed just like that. Instead, so that's the thing that I looked at when I went through the GER30 setups and everything. Okay, it's fine. Let me remove him, and then let me remove him. So let's go back to our 4-hour time frame now. So this is what we're currently expecting on GER30. We're expecting what? A possible drop within the markets that will do what? That will come tap into a point of interest and then start giving us those buyers that we are looking forward to. So that's the current analysis that I have for GER30 at the moment. Okay. Okay, ladies and gentlemen, it's your boy Tumelo JPY here. On today's session, we're gonna be mainly focusing on the theory of XAUUSD, which means we're gonna be doing a top-down analysis of what? Of gold. You understand? So on gold, we can simply see that okay, we are also introduced to a series of what? An uptrend. You understand? The monthly time frame breakdown. A series of what? An uptrend. We break highs and respect lows. You understand? So those are the rules of what? Those are the rules of gold. You understand? So now what happened was that okay, gold had this high here. This is the previous high on gold. So now it took it out. It gave us what? It gave us a breakout of structure at the top. You understand? So which means there's a high possibility of us seeing gold doing what? There's a high possibility of seeing gold doing what? Pushing to the downside, maybe to this level here, and then start giving us those buys to the upside. That's what it breaks that level. You understand? So this phase here can be seen as what? A grab of liquidity. Okay, which is fine. Let us not rush things. You understand? So now we're gonna be focusing on this theory that's gonna be happening here. You understand? So because that's where the current market is. So let's just mark out our things here. Let's mark out our supply level. So we might have this guy here as, our demand level. We might have this guy as our demand. And then we might also have this guy here as our demand level. Those are our monthly things. You understand? Just mark them out and then let's go deal with the current things now. So when you get to our weekly time frame now, these are the things that we're gonna be dealing with. So as you can see that okay, we're on a series of what? An uptrend, right? The market went up, creating what? Higher highs and high lows. Created a high with respect to this point of interest, and then gave us a breakout of structure, but then never came down to respect maybe this point of interest, okay, which is also fine. And then it gave us a breakout of structure, and then it came to respect what? This point of interest here. You understand? That is why we saw gold doing what? Retracing at this level and then pushing to the outside. It was because of what? That point of interest at that level. So let's just do it properly. So we have what? A POS at this level. We have your breakout of structure at that level there. We have a POS at that level. And then that's the grab of liquidity. So we have that type of liquidity at that level. Okay, and then at this level here, what are we gonna have? We're gonna have this guy as our what? As our demand level here. And then we're gonna have this guy as our demand level, which means our entry points were supposed to come out of this guy. Okay, we're gonna do a beautiful back down on gold personally. So now let's cut the market here. Okay, wait, I think I'm having problems now. Okay, now it's fine. So let's cut the market there. Okay, so now we can see that. Okay, let's go to our daily time frame actually. So now the market broke this high, right? The market broke this high, so which means you're looking forward to seeing gold coming to this band of interest here, the weekly band of interest. Okay, so now we have what? We have this bearish movement here. So now you can see that okay, we have what? We have a breakout of structure at this level here. We have a breakout of structure at that level. And then we have this guy as our band of interest here. We have this guy as our band of interest. So which means our targets, if we take such trades, our targets will be where? Will be at that level there. So let's look what the market does. Goes down, and then that's what? It mitigates our band of interest, right? It mitigates our band of interest. And then this simply means that, okay, this guy here, he was what? He was mitigated. We're going to take selling opportunities till the market taps into a band of interest. So now what are we having here? We're having a breakout of structure, the bottom BOS, and then which means we're gonna start looking for our entry points within the supply level here. Instead, we're gonna start looking for selling opportunities within that supply. So the market goes up, then it taps into our supply, gives us our selling opportunities, and then it hits our take profits. Understand? What does it do? It hits our take profits at this level here. Our take profits have been hit, and then this simply means that okay, this guy was what? This guy here, he was mitigated. You understand? That guy was mitigated. Then the market now does what? It finally taps into our point of interest. You understand? It finally taps into our point of interest. And then the good thing is that okay, when it taps into it, it also taps into the 50% equilibrium, I think. I think it taps into the 50%. It taps into a 50%, so which means there's a high opportunity of the market retracing here, just here. And then, yeah, so let's take our trades, maybe till it takes out all those highs here. Okay, and let's see what's gonna happen. Okay, the market does what? The market gives us the buying opportunities. Okay, maybe you come to a daily time frame. When you get to a daily time frame, what do you see? The confirmation entry point, right? The market came down doing what? Creating a high, a low, a high, a low. I mean a low, a high, a low, a high, a low, and then a high. Till the market does what? Till the market takes out. Let's just go to an 8-hour time frame now. When you get to an 8-hour time frame, the market gave us a breakout of structure, a change of market character, and then inducement here. So it came to do what? To respect this point of interest. You understand? So let me just make everything formal now. And make it look presentable. So we are at our point of interest now. It's not about the butterfly block, it's about the confirmation entry point. So what are we having here? We're having a breakout of structure here, a breakout of structure there at the bottom, a grab of liquidity, and a switch of a trend here. We have a change of market character at that level there. You understand? We have what? A change of market character at that level there. You understand? And then this guy here is going to act as an inducement. The market never tapped into a point of interest. So which makes him what? Inducement. Either way, it's liquidity. Yeah. So we have that liquidity, and then our point of interest is going to be where? It's going to be here. Then our point of interest is just going to be there. And then this is our demand level, our confirmation demand level. Okay. So which means we're going to place our entry points either way, on our 50% or on our weak entry point. Yeah, I still make money. Okay, so the market, we're looking forward to taking out all these highs here. All these highs here needs to be taken out. Because of what? We tapped into our point of interest. Okay. Let's say we're aiming for that high. Like I said, I have to be honest with everything that I do. Okay. The market does what? The market pushes up beautifully. Okay. Let's just do it this way. The market pushes up beautifully, and then okay, pushes up to this level here. But then let's look at something also. We had this breakout of structure here, right? So technically the market won't just pass that level like it's nothing. Then we have this breakout of structure here, and then we have this point of interest here. We have this point of interest, our supply level here, our supply level here. So now let me just remove this guy here. Yeah, that supply level there, and I think our 5-hour time frame also have this point of interest here also. We also have that point of interest there. So which means one of these guys needs to be respected. So we have that supply level there. Understand? Okay. So since we also can see that okay, the market has we took this bar from here to here. Our take profits has to be within one of these targets here. So now what we're gonna do is that okay, we can become clever now. We have to become clever now. So now we can see that okay, the market gave us what? The market gave us a breakout structure here, right? Gave us a breakout structure within this level here. A bottom POS. It gave us a breakout structure here. On the top. A breakout structure here. And then technically we know that okay, our point of interest here it was what? It was mitigated. That point of interest there it was mitigated. So now let me just bring this guy here. Or let me just make him a little bit longer. Okay, because that's what's gonna happen. So all these guys here, they're gonna act as our internal range liquidity. So which means there is liquidity here. So you're gonna take yourself from here to where you're gonna take yourself from this point of interest, maybe to this other block here, maybe to this point of interest here. So this is what we call what a sell to buy model. So now let's see what the market does. The market fully does respects our point everything, and then okay, let's pause here till the market does what? Till the market comes and do it and tap into our point of interest. So the market comes and taps into our point of interest. So as you can see that okay, it came and did it. It tapped into this guy. Okay, take profit has been hit. So most of you guys are gonna get taken out. Then you're gonna say that Tumelo. So things are not valid. Guys, confirmation. You go to your M4 H4 time frame to look for any possible confirmations. This was an event. You understand? This movement happened, I think, through an event. So what do? Go to maybe to our time frame and look for any confirmation that you can see. Okay, so we can see that okay, we have what we have a regular structure here. We have a regular structure at this level. There's the graph of liquidity, so there must be a point of interest somewhere there. So as you can see that okay, the market came from this point of interest. So that's where your buying opportunities were supposed to come from. They're supposed to catch your buy from there. So let's go back to our daily time frame. Actually, for our time frame. So you're gonna take your price from that level, and then you're gonna make them a little bit longer, and then your stop loss just right here. So you're gonna aim for this highs first. Aim for those highs. The market does what? The market rallies up. Okay, and then the market still playing around, something. And then also here, I think if you want or if you can see that okay, the market gave us what? A breakout structure here, right? Just gonna take this risk here. The market gave us a breakout structure here, grabs this liquidity, and then it respected this point of interest here. You understand? So it respected that point of interest, and also what do you see? The market gave us what? A breakout structure here. So top view as gave us a breakout structure there, which means it gives us the opportunity to use this guy as what? A possible point of interest. It gives us the opportunity to use this guy as what? A possible point of interest. So now let's go about like understanding this guy. So now the market takes him out. The market takes him out with immediate effect. Okay, it's fine. So which means this guy's what? This guy's acted as what? A sell to buy model. There was a sell to buy model within this range here. But it's fine. Since we took this buy from here to here, okay, our targets were hit. Our targets were hit. So this was gonna happen now. Just showing you that okay, there are some mistakes that I also made as an individual. You understand? We have this breakout of structure also here. It respected that point of interest, but then do not forget that when the market pushed up, it gave us what? A POS also here. A top POS. Actually, this thing is just way too far. A top POS. There was a breakout of structure at the top. So which means it left this guy as our unmitigated point of interest. So which means our point of interest, it's going to be at that level. We're not swing our buys from here. Now we're going long now. This is the opportunity where I can say that again. We as traders can do it, can go long. We can go as long as we want. So let's just go to our daily time frame and see this whole movement here. Let me just remove this guys because you know where those guys are. So that's where we're gonna take our entry point. Okay, let me just bring it a bit here. So when you take such entry points, we're looking forward to taking out all these highs here. So let's say maybe to here. Okay. So now the market does what? Okay, the market takes out our entry point. It's fine. So why is the market doing that? The reason why the market ended up doing that was what? Keep on asking yourself, guys. Note that okay, nothing that I did here, it was scripted. Nothing that I did here was scripted. So which means making these personal mistakes. So the reason why the market came back down was what? Was because of this POI here. The supply level here. Which was hunted also, which means we had a supply hunt here. And then the market came and filled that imbalance. So we have a POS, we have a change of market character. Instead of the market respecting what we call this thing, the point of interest, it came and respected what? The imbalance. As you can see that okay, your entry point, your initial entry point was supposed to be here, your stop loss was supposed to be here. That's how the whole thing was supposed to be. Forex is tough. So we have a demand level here. We have that demand level there. Then let's go back to our weekly time frame. So let's go back to our weekly time frame. Weekly time frame, and then yeah, we have this bias now. We have this bias, and then the market start doing what the market starts. Even guys, we can use this guy as our point of interest, as our main point of interest. Yeah, that's right. Let's use that guy as our main point of interest. So which means our entry points were just gonna be here. And then the loss was just gonna be here. Yeah, so now the market does what? It goes up, it breaks the structure here, giving us what? APOS. Gives us a breakout of structure. And then what happens is that okay, the market needs to do what? It needs to come back and respect this point of interest here. So let's see what happens. It comes back, taps into that point of interest, start looking for buying opportunities now. Start looking for those buying opportunities from this level. Or even maybe the bottom POI. But then let's use the first one. Let's not check the process. We're trading like normal people now. Okay. So it respects this guy here. So we just pause him. It respects that guy. And then the targets are just gonna be the same targets now. Sorry about that. We're targeting these levels here. We're targeting those levels. So let's see what's gonna happen now. The market does its things and then boom, we have those buys afterwards. Because we can see that okay, the market ends up doing what? The market ends up hitting our targets, both our targets actually. The market ends up hitting our target. So this is how the gold buy came about. This is how the gold buy gold came about. So we come to this level here. You can see that okay. The POI at this level here, it was mitigated. POI was mitigated, and then this guy here also, he was mitigated. This guy here, he was mitigated. And then, all the POIs that are here, they are all what? What did I do? That's right. All the guys that are here also, they are what? This POI here, it was mitigated. So as you can see that okay, everything was just well placed. So the market went up to that level there. Okay, so him is no longer valid, and then him is no longer valid. So that okay, the market mitigated that point of interest there at that level. And then also this point of interest here, it was what? It was mitigated. Okay, so all the point of interest were what? Were mitigated. So now we are currently here on gold. So gold went up and came back down. As you can see that okay, the reason why it did that was what? because of this breakout structure, gold came back for what? For this point of interest here. So we have a demand level here. So within the current demand, what is currently happening with gold is that okay, we can also see that okay, we have what? A point of it tapped into the demand level, and we can see that okay, we have that point of interest. If you go to your 4-hour time frame, you'll see that okay, actually yes, let's before you go anywhere further, let me just cut this whole thing so that you can be able to understand how we went about gold, just to make everything fair for you guys. So gold was on a bearish trend, right? Before it tapped into a point of interest, it came down creating a high, a low, a high, a low, a high, a low, a high, a low, high, a low, a high, a low, a high, a low, a high, a low, and then a high. Okay. Then look what the market does when it taps into your point of interest. Look what the market does. It breaks this high here. It takes out that high there, giving us what? A possible charge at the top. Instead, it broke that high. And then what are we having also? A breakout structure here. So this is the confirmation entry point we use, me and my VIP members. I got some POS. So we're gonna use this guy as what? As our point of interest now. That's where we're gonna take. If you check my Instagram account, I posted this analysis. We took the buy. Then we have a demand level here. So which means we're gonna take our buys from here to the upside. Okay, so let's see. Maybe till like maybe let's say maybe till this high here. So the market does what? Taps into a point of interest. Okay, and then that's what it rallies up. So as it rallies up, okay, let's leave it. We are swing trading it now. So as you can see that okay, it's currently doing what? It's currently playing around at this level here. So what is the next movement for gold? That's fine. We can see that okay, gold broke this level here, right? It broke this level here, giving us what? A POS. So this is the confirmation structure that we have. The market comes down, creating this guy. It taps into him, breaks him, comes back here, and then rises. We have a breakout structure at the bottom, breakout structure at the bottom. We have a change of market character at the top, and then the trend is only going to be confirmed when the market breaks this high here. Then we have what? A POS at the top. A POS at the top, which means we're gonna enter our trades within this point of interest here. Understand? So which means this guy was what? That guy was mitigated. Understand? That guy was what? Was simply mitigated. So let me just bring it along now. And then which means we're gonna take our trades within. Okay, let's look for maybe a daily order block. There's no daily order block, a 3-hour order block. You can see some, yeah, we can take our trades from this order block here. So which means all the levels that are here, they are what? They can act as liquidity. All the levels that are here, they can all act as what? As liquidity. I don't have a thing for liquidity. They can all act as what? They can all act as liquidity. So which means you're looking for gold to do what? To come tap into this PRI and then start giving us those buys afterwards. So the main analysis that you're gonna have for gold is what? Let me just fix this guy. So it's gonna be something. It's gonna be something like this. It's just gonna be something like this. And then that rise afterwards. So yeah, ladies and gentlemen, that's my analysis on XAUUSD. That's my analysis on gold. See you guys after some few weeks.